Good morning. Happy Easter Friday. Us Italians, we have a big fish feast today, so happy Fish Friday to you. And why are we doing a video on Friday morning? You know, I just had 2 more phone calls, and that's about 8 or 9 total now in the last couple of days, with some investors who are really concerned about the latest interest rate changes. So we went up a quarter point a few weeks ago, and just this Wednesday, another half point. So we're up 3/4 of a point in basically a couple weeks, which is a big deal. We haven't seen rate increases like that in over 20 years in Canada. And my first inclination was to tell them that, hey, this kind of had to happen. I mean, we were at ridiculously low rates for so long. So this was inevitable. I'm surprised it even took this long. So, but regardless of that, you know, people want to know what to do. What do I do here? How do I prepare? What's going to happen? Is property prices going to go down? Are they going to stabilize? Are they going to flatline? You know, how expensive is my mortgage going to get? All that kind of great stuff. And the reality is, yes, if you're using your HELOC to fund for down payments to fund your real estate purchases, yes, that's going to become more expensive. Okay, so an extra 0.75% on every 100,000, it's an extra $750 every year. Okay, so it is going to eat into the income. And how do you overcome that? Well, right? I mean, charging more rent, that's the easiest solution. But if the market doesn't allow you to do that, how do you do it? Well, you got to get creative with your offering. You know, and I'm down here in a big reno. All we do is renovate stuff. I'm down here in a big reno, and I'm like, okay, I'm walking around here after the conversation thinking, what can I do here to add more value? And this is my house. But if I was going to rent this out, what could I do? Right? And so that's the mentality you have to have, rather than that, screw them, and these guys don't know what they're doing, and what do I do? And they're in my pocket taking my money. What can I do to add more value to get an extra $75 a month in rent, or an extra $100 a month rent? I'll give you one right now. If you're doing, say, a duplex conversion, for example, and you wanting to overcome the extra interest payments on your HELOC or whatever it is with the rate increases on your mortgage payment, on your variable mortgage payment, right? Because variable mortgage payments went up too with the rate increase, right? So what I'm doing is I'm separating the backyards into 2 separate spaces so that each unit up and down has their own separate private backyard space. And yes, that costs a couple thousand, but I'm able to get higher rents because I can give them an asset that they can't get anywhere else. If they were living in an apartment building, you're not getting any green space at all. And if you just do a duplex conversion, typically you're going to have to give the backyard or front yard to just one unit. But if you separate them with a little fence and a little doorway, spend some couple $1,000s on fencing, now you can say, hey, private yard space. Your unit, as compared to other units, is now more valuable. Yes, you can charge $50, $75, $100. For those who have pets, a little cat, a little dog, they want to throw a barbecue, how valuable is that? Okay, so that's just one little tip. But I want you to have that mindset when you're out there. Look, this is what my message has been to everybody. Look for ways to add value to overcome the deficit. That's what a smart investor would do. Now, in the next video, we're going to talk about some direct impacts on the market in general, but I wanted to touch base on this specific point because I don't want you to be afraid. I don't want you to sit there and be a victim of the changes, because more changes are coming. So let's get ahead of it. Let's be sophisticated with it, and let's turn a problem into an advantage for us. Okay? The more creative we are, the smarter investors we're going to be. Okay? Until next time, folks.